Welcome back to Alberta Primetime. On the Vocal Point tonight, our Monday Money panel, ready to take on the Ontario Premier's rant against Alberta, as well as the U.S. government days from going broke. What does it mean for you? And a penny tax to pay for new arenas in our province? Lots on tap with Bob Aska. He's director of the Institute for Public Economics at the University of Alberta. Beth Hamilton-Keene is a director and portfolio manager at Moore Investment Management in Calgary. And Shafik Hirani is director and senior executive financial advisor with Investors Group Calgary. Welcome back to Alberta Primetime, everyone.
Good to be here.
Thanks.
One day, just one day after Alberta's energy minister beamed about cooperation at a Kananaskis meeting among his Canadian counterparts, Ontario's Premier Dalton McGuinty was spitting that he's tired of subsidizing Alberta's oil and gas industry and federal funding should flow instead to Ontario's clean energy initiatives. Beth, what do you think of McGuinty's comments that Alberta oil and gas companies are getting, quote, preferential tax treatment? Canadian Taxpayers Federation says they looked and couldn't find the breaks.
Well, it certainly looks and feels like to me like one of those playground shoves, just meant to get some political attention grabbing at best. Certainly very controversial and a nice little east-west debate getting heated back up again, but really seems very political and very politically motivated, no question about it.
Bob, do you think that at some point, I mean, this was a bit of an election issue as well, corporate subsidies. Will there come a point when Alberta energy companies face a change in tax policy in general?
Well, that discussion, there are two elements to that, Jennifer. One is the royalty system, which Alberta, as the owner of the resources, they take what some might regard not as a fair share or an adequate return to the population. And then there's personal and corporate income taxes. And, you know, as Beth was saying, there are certain accelerated capital cost allowances and different things in the tax laws that any corporation that qualifies are able to take advantage of that. And corporations spend a lot of money trying to minimize their tax.
So but it's not just energy companies?
No, it's banks, it's auto manufacturers and so forth that have these large tax departments that want to minimize tax. I think the other issue that McGuinty is facing, as Beth said, is political. He's running a losing campaign. It's easy to blame somebody else for their problems. Ontario's in a difficult financial situation.
Right. Shafik, Alberta's and Saskatchewan's premiers countered at the meeting that McGuinty made his comments at that our energy sector supported workers who lost jobs in Ontario's manufacturing sector during the recession. They said all provinces pitched into the Ontario-based bailout for automakers, and as well that the oil sands in particular create jobs coast to coast, not just in this province. Are the rebuttals valid?
Absolutely, and if you take a look at some of the additions, Ron Liepert, the energy minister for Alberta, he just hosted a meeting here in Kananaskis, and they came up with a regulatory framework. And I think some of the shots by the East are more just our own reputational burden that we've had to argue and fight for the last forever. So the validity of the comments, the validity of our infrastructure in oil and gas, it's very sound.
So do the comments, you know, there are more arrows in the flurry that keep coming the oil sands way. Beth and maybe Bob, do the comments from the Ontario Premier, he did say the oil sands as well, not sustainable nor environmentally responsible. Do those comments do any significant damage or not to companies' profiles and investors' views of them? Beth?
I wouldn't say it does any additional significant disadvantage to them. I believe that a lot of those comments are pretty much commonly understood and heard, and certainly those that aren't fully informed and aren't kind of investigating it fully, it's very easy to kind of count it off as dirty oil. We've seen California do it, we've seen movie stars do it. It's just kind of that common conception that's out there. I would say, though, that a lot of this comes around with market cycles. So if you think about what's been doing well in Canada in particular, it's the resources, it's energy stocks, it's energy companies, it's those energy prices have been doing well. When manufacturing was doing well, think about the shots that were going the other way. So look at the economic cycles that we're going through and what happens to be going on and what happens to be doing well at any given time. And you can see which way the barbs are going to be thrown.
In the end, investors want to make a buck. Bob, a Calgary Herald columnist called McGuinty's hypocrisy breathtaking when you consider equalization payments. We always hear, well, Alberta's fueling Canada's economy. Can you give us an unbiased view?
Well, we do have this great heritage, which is the oil sands and the natural gas and the conventional oil that we have. So we are really quite fortunate. And I think that getting into East and West debates are politically convenient. But at the end of the day, we as Albertans, I think, have to look at our own challenges. And there are two challenges. One is fiscal. How do we save for our future children? And the second issue relates to the environment. And these are very legitimate questions. It isn't a public relations issue. It is the environment. What are the cumulative impacts on the water? What are the cumulative impacts in the air? And I came back from a tour of the oil sands, and I think we were at the Shell Albion station, and they're very responsible, and they're spending tens of millions and billions of dollars dealing with that. But we also have to be wary of those challenges. The other comment that I made early to you, Jennifer, is economists have what they know as externalities, and these are the costs that really go to the public, such as air pollution, and that are really not borne in the cost of the oil and gas. And we're trying to move in that direction.
So government's paying for those things right now with things like CCS?
I mean, ultimately, yes, governments are paying a large part of it to deal with like carbon capture, but it is a cost to all society. And ultimately, society is going to pay for it in terms of slower economic growth over the long term. And I think Mr. McGuinty, in fairness, green power is something that Alberta needs to think about too.
Good insight from everybody on this. There's more to come. Next up, an Alberta Tory leadership contender pitches a penny tax. And are we as safe as we think from a debt crisis such as the one strangling the U.S. and Europe? The Monday Money Panel returns in a moment. The United States will basically run out of money unless government raises its debt ceiling by August 2nd. That's the date, at least, that President Barack Obama and his Treasury Secretary say government will not be able to meet its obligations by. Shafik, what does this mean for us in Alberta and Canada?
Well, for Canada, it means different things than it does for Alberta, because you have to understand the Republicans are pushing for around $2 trillion to increase this debt ceiling, and they're at $14.2 trillion already in debt. That buys them about 18 months. There's a couple of rating agencies, one's called Fitch and one's called Moody's, and in Europe they announced this morning that they might degrade the valuation of the U.S. debt from AAA rated to AA rated, irrespective of whether they make their debt payments past the August 2nd deadline. If that happens, you could see a devaluation in the markets, in the currency of the United States, and that actually would be good for Albertans because we can go visit and they will still buy our oil, but that would be detrimental for Canadians, Eastern, that export a lot, and it'll hurt the currency in terms of the parity relationship between the Canadian dollar and the U.S. dollar.
Beth, what are your thoughts on impacts?
Well, certainly it's causing a lot of uncertainty in the markets because we just don't know how this is going to resolve itself. It does seem to be a lot of political maneuvering. At this point, it really is kind of that political debate between the two parties. I think from a true longer-term impact, we should see that debt ceiling increase. Really, the cost of borrowing that money is increasing at a faster rate that it can be dealt with. Really, the long-term impact, though, is that we're going to have to see governments around the world begin to deal with the debt.
Right.
And the debt that's moved from corporations to the governments in order to kind of to rescue ourselves out of this debt crisis, we're going to have to pay for it at some point. So we're still postponing the inevitable, and that's the longer term concern. What it will mean is long term it'll be a tax on growth. Whether it's a tax to you and me as individuals or a tax to corporations or all of the above, it will mean that we will expect lower rates of return going forward.
So what does that mean then, Beth, and Shafik, if you want to jump in as well? Anyone with an RRSP is thinking, this is going to hurt.
Certainly it will hurt in terms of volatility in the near term. We do believe, though, and we feel that there's a more likely scenario that there will likely be or could be a quantitative easing 3 package, some further stimulus to come out in the United States after we've gotten through this political maneuvering. We also believe that in order for the United States to kind of survive this and kind of wade through, that we'll have to see interest rates kept at a fairly low rate. Can you imagine the disaster if interest rates begin to go up very quickly, what that would mean in terms of repayment and the outstanding debt? So we hope to see, or we expect to see in a most likely scenario, interest rates kind of leveling off at around that 3% level for quite some time, making it a little bit easier to work our way out of it.
We do have
sorry, Jen, go
ahead. No, Shafik,
the U.S., they always seem to pull a rabbit out of their hat somehow, so, you know, there could be a rally also. A lot of the pricing pressures have been priced into the markets, and a lot of people, there's a lot of uncertainty at play. That's why people with RSPs right now are a little bit nervous, and rightfully so.
Bob, the question remains, how could so many smart people let such a thing happen? What do you see as the impacts for us on this side of the border?
Well, I think the credit rating downgrade is almost inevitable, so that we will see the U.S. at a AA level. There's a small boutique, Egan-Jones, that have already downgraded the American government.
Which just means it's harder for them to get loans.
That's right. It is a political process, obviously, there, and there are some very deeply entrenched views. There's been a fracturing of the U.S. system and a polarization in the U.S. system with the Tea Party. And they will, I think, ultimately come to some kind of accommodation, although I think it's just kicking the can down the street a little bit further. And these periodic challenges to the creditworthiness of the United States is going to, I think, be pervasive and have an influence on the investment. The quantitative easing, I looked at the U.S. Federal Reserve balance sheet, 1.6 billion of that 14 trillion, sorry, 1.6 trillion of the 14 trillion is held on the U.S. Federal Reserve's balance sheet, and they're holding another trillion for the Chinese and Japanese as well. So these are investors that are looking at other alternatives, and I think that it will mean that the value of the Canadian dollar will remain high. It is going to cause a lot of problems, though, in Ontario.
Well, and our Bank of Canada Governor Mark Carney is looking at that as one of the factors he has to deal with when deciding interest rates. He's keeping them at historic lows, announced days ago, because he does not want to dampen borrowing and economic stimulus. He believes other things already will. Here's Mark Carney.
The 3 main downside risks to inflation in Canada relate to sovereign debt concerns in Europe, headwinds from the persistent strength of the Canadian dollar, and the possibility that growth in Canadian household spending could be weaker than projected. Overall, the bank judges that the risks to inflation, the inflation outlook in Canada are roughly balanced over the projection horizon. And reflecting all of those factors, the bank yesterday maintained the target for the overnight rate at 1%.
Beth, why do economists like his decision to keep our rates low? We thought a year ago by now they'd be up quite a bit.
Certainly we thought a year ago that they'd be up by now because we were expecting growth and inflation to kind of kick in a little bit harder. At this point, we're seeing a little bit of relief in that the growth isn't as much or inflation isn't as strong, and therefore we can buy some breathing room with these lower rates. Lower rates mean corporations can continue to borrow and invest, individuals can continue to borrow, and without those costs escalating too quickly for them. So all of those things are positive in the near term.
Okay, I just want to shift gears quickly, and Shafik, I'll throw this one to you. Conservative leadership candidate Ted Morton says a penny tax for local residents who want to build new NHL arenas, such as the one in Edmonton, Calgary would be next, could be applied. So a penny tax, 1% on top of the GST for 2 years would give you $100 million, help with an arena. Edmonton, Calgary, you're listening? Shafik, what do you think?
Yeah. Well, you know, the viability or the feasibility of this are pretty low, I think. I know.
I don't think people will like it.
Yeah, well, first of all, it's not really a penny. It's 1% of the GSP, and that's going to add up to $100 million. What if the project comes in at $500 million instead of $100 million? That's impactful, so I can't see it happening.
It's like buying a couch for $10 a month for the next 2 years.
Yeah.
Great thoughts from everybody. We have to wrap it up here. Thank you so much for your time. Bob Aska is Director of the Institute for Public Economics at the University of Alberta. Beth Hamilton-Keene, a Director and Portfolio Manager at Moore Investment Management. And Shafik Hirani, Director and Senior Executive Financial Advisor with Investors Group Calgary. Thank you all.